The only negative right now is I hear people saying, oh, we missed it. Like, are you joking? Maybe the national anthem has ended. Maybe we're in the first inning, but the game's barely started. I mean, we are at just the knee of the curve. So if you think about an S curve, you get 10 years for the early adopters, 10 years for the middle 80%, and then 10 years for maturity. We're just entering that second decade. First 4 years, science experiment, doesn't really count. The next 10 years, real. This year, real. But we're not even a year into the upward slope of the S curve. And so to say you missed it, not even close.
According to recent data from BitMEX Research, the Grayscale Bitcoin Trust recorded $643 million in outflows on Monday, March 18th, the biggest daily outflow for GBTC so far. After the report was released, Bitcoin dropped from over $68,000 to a low of $62,000, its lowest price since March 5th. Though prices have recovered briefly in the past few hours, Bitcoin's price is still down by around 12% in the past week and about 7% today. These small corrections notwithstanding, we are still in the early stages of the biggest cryptocurrency bull market in history. Over the past few months, several prominent crypto investors and analysts have predicted that the influx of institutional investors through the spot Bitcoin ETFs will make this an exceptional bull market for Bitcoin and other cryptocurrencies. Before the approval of the spot Bitcoin ETFs, Morgan Creek Capital founder and CIO Mark Yusko predicted that at least $300 billion would flow into Bitcoin through the ETFs within the next few years. Yusko arrived at that figure by predicting that at least 1% of the $30 trillion managed by wealth managers would be diverted into the Bitcoin ETFs. However, according to Grant Engelbart, the vice president and investment strategist at Carson Group, investors are allocating an average of 3.5% to the Bitcoin ETFs. Carson Group is one of the earliest advisor platforms to onboard the Bitcoin ETFs. During a recent interview with Bloomberg TV, Grant noted that only a handful of investors have allocated to the ETFs, but the turn-up has been significantly higher than expected. During a recent interview with AdvisorShares, Yusko gives his outlook on the 2024 crypto bull market, which he says will be a massive turning point for the industry. Yusko is looking forward to the parabolic moves of crypto fall, which he says will begin in June 2024 and last until June 2025. During that window, Yusko is predicting significant price gains for cryptocurrencies like Bitcoin, Ethereum, Solana, and even meme coins. As we bring you clips from Yusko's interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
We are deeply into crypto summer, although the fun part starts in crypto fall, which will start this June post-halving. I've been talking about this forever, literally. The whole hashtag get off zero. Zero is the wrong number. And we're starting to see that permeate everywhere. So, the early adopters, the nerds, the geeks, the wizards, all that stuff, that happened kind of from, 09, 10, 11, 12, 13 into 17, 18, 19. And that first decade is tough for people to really kind of catch on. But now we have these ETFs, which make it possible to buy without going through all the hassle of having a device and, deal with the bearer assets. And it's such a big deal. And I don't think people really appreciate how big. I mean, it's pretty amazing. You go back a year, and a year's not that long, right? But a year ago, we were sitting just around 20K. We had rebounded 33% off the Hurricane Sam bottom of 15K, back when, everyone was like, oh, it's going to zero. Like, zero is a really big difference from $15,000 per coin. Now, it was zero in 2009, mean, literally zero. There was no value in the network. It was a science experiment. People didn't really know what to think. Was this really anything? Today, if you spent any time with Bitcoin, you understand that it is the future of money, right? And by money, I mean the base layer of money equivalent to gold. Beyond that, Michael Saylor's been on TV lately talking about how it's digital property. Even calling it a cryptocurrency is undervaluing what this means. And as more and more people realize that, we went from 20,000 a year ago to over 70,000 today per coin, and a market cap well in excess of $1 trillion. So again, from zero 15 years ago to over $1 trillion. And here are two things for advisors that are really, really important. Actually, three things. One, it is Bitcoin, the best performing asset of any asset that you have in your client portfolios, 12 of the last 15 years. And it's on pace to be, 13 out of 16 because it's winning this year. Okay, so why do most people have zero? Doesn't make any sense. Second thing, the Sharpe ratio, meaning the return per unit of risk, is the best over the past decade of any asset. And it's not close. So again, how could anyone have zero? Doesn't make any sense. And then the last is, and it really underpins that the second, the correlation of Bitcoin to bonds is 0.0, and the correlation to stocks is 0.15. So it's the best diversifying asset. If you look at the Markowitz framework for building portfolios, it's the best diversifying asset we've ever had. Better than hedge funds, better than private equity, better than real estate, better than REITs, better than commodities, better than CTAs, better than cannabis, better than anything. And that doesn't mean those other things aren't good. This is just better. So the light bulb's gone on that everybody has to get in the pool.
Despite the GBTC sell-off and the price declines, Binance CEO Richard Teng now expects Bitcoin's price to surpass his earlier estimate of $80,000 in 2024. While speaking at an event in Bangkok on Sunday, Teng explained that the spot Bitcoin ETFs have seen significant inflows since their approval in January, predicting that more endowments and family offices will increase their allocations to the funds soon. According to Teng, the reduced supply post-halving and increased demand from the ETFs will easily push Bitcoin's prices past his earlier estimates of $80,000 before the year ends. The Binance CEO, however, noted that the crypto rally won't be a straight line, adding that the ups and downs will be good for the market. Like Yusko, Teng believes that the bull market is only just starting, and things are about to get heated up. Let's get back to the interview.
So in the beginning, every 10 minutes, they would create a block. And in order to create a block, you have to have miners, which are basically just computers, to cryptographically secure that data, create a hash. Okay. And in order to entice someone to buy computers and pay for electricity and do this, you pay them what's called a block reward. So the way Bitcoins were created is every 10 minutes, back in 2009, 50 Bitcoin were awarded to the miners. Every 4 years, that number gets cut in half. Well, if you think about that, the genius of it is if you cut the rewards in half, well, then some of the miners would go out of business. Well, the miners don't want to go out of business, so they hold their Bitcoin longer until the price rises, because that's how markets work, right? People say there's more buyers than sellers, or more sellers than buyers. No. There's always the exact same number of buyers and sellers. That's how a transaction works. It's the price that adjusts. If a buyer wants to really buy, like right now, every day, money's going into the Bitcoin ETFs. Those ETFs have to buy. They don't have a choice. They must buy. So they are price insensitive. No matter what the price, they've got to buy it. The sellers, on the other hand, are like, I don't have to sell. So you know what? Unless you pay me more, I'm not going to sell. Now, if they need the money really fast, like say the electricity bill comes due, they're like, I just got to sell no matter what the price, no matter if the price is falling or whatever. It doesn't really matter. So supply and demand have to balance. But if the price then starts to rise, well, what happens? Well, that causes attention and that causes activity. And so we get these cycles where the price starts to go up. And the problem with the price going up of anything, whether it's NVIDIA shares or MicroStrategy or Bitcoin, the gamblers start to come in. They're like, oh, look how high this is going. I'm just going to buy it. Did you do any work? Well, no, it's just going up. I'm going to buy it. And so it pushes the price to crazy town. So that was 2017 at 20,000. The fair value of the network was 10,000. We got to 20,000. In 21, the fair value of the network was 31,000, and we got to 68. Well, eventually, the kid says, hey, that guy's not wearing any clothes, right? The emperor has no clothes. And the price will adjust, and that's crypto winter. So we went through crypto winter in 21, and we went all the way down, right? All the way down to 15,000, way below the fair value, because the fair value had started to creep up into the 40s. So we were way below fair value. Well, then what happens? Well, when any asset, again, whether it's a cannabis stock or a bond, it doesn't matter. If the price is below the fair value, because that's one of the things about price. Price does not equal value. In fact, John Burbank, one of my good buddies in the hedge fund, said price is a liar, right? Price has nothing to do with value. Price is just what two people agree to exchange a small amount of good or service. The value is what the value of the asset is. So when the price was 15 and the fair value was in the 40s, I'm waving it in. Like,
come on in, yeah.
So I'm going to buy it. So that was a year ago. And for the last year, we went from crypto winter in 21 into crypto spring, right? Which is where the price kind of stabilizes. Then crypto summer, which we're in today, right? So from June of 23 to June of 24 is crypto summer. And crypto summer is where you start to get back to fair value. So fair value today is in the low 50s. Well, we got there right before the ETF launch. And now we've exploded up to 70. It's like, what's going on? Supply and demand.
Meanwhile, MicroStrategy has acquired another 9,000 plus Bitcoin, according to a Tuesday announcement from Michael Saylor, the firm's founder and executive chairman. In a post made on X, the renowned business executive wrote, MicroStrategy has acquired an additional 9,245 Bitcoin for approximately $623 million, using proceeds from convertible notes and excess cash for approximately $67,382 per Bitcoin. As of March 18th, 2024, MicroStrategy holds 214,246 Bitcoin acquired for approximately $7.53 billion at an average price of $35,160 per Bitcoin. With the latest purchase, MicroStrategy now holds over 1% of Bitcoin's 21 million maximum supply, a huge feat for Saylor and the Bitcoin development and software company. In other news, Standard Chartered has raised its price prediction for Bitcoin as a result of the record trading volumes and notable inflows witnessed in the spot Bitcoin ETFs in only 2 months after launch. The bank now expects Bitcoin to hit a new all-time high of $150,000 in 2024 and $250,000 in 2025. According to Jeff Kendrick, Standard Chartered's head of crypto research, the bank arrived at these price targets by analyzing Bitcoin's performance in relation to the price of gold after the approval of gold ETFs. In a note sent out on Monday, Kendrick wrote, "We think the gold analogy, in terms of both ETF impact and the optimal portfolio mix, remains a good starting point for estimating the correct Bitcoin price level medium term. If ETF inflows reach our midpoint estimate of $75 billion, and/or if reserve managers buy Bitcoin, we see a good chance of an overshoot to the $250,000 level at some stage in 2025. Please share your thoughts on the video, especially on Yusko's outlook and MicroStrategy's latest Bitcoin purchase. If you have yet to do so, also ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.